Welcome in everyone to Morning Invest. I'm Clayton Morris. So glad to have you here. Really thrilled about today's show because we're going to be talking about a couple of really difficult and important topics that are shaping the future of the U.S. economy right now. Number one is the value of the U.S. dollar and inflation. And we're going to talk about how to make some money off of this. And I'm going to talk to you about how I've repositioned my portfolio during this crazy run-up and overspending by Uncle Sam. And how I've told you and warned you about the U.S. dollar. And, the value of a U.S. dollar today is worth less than it is tomorrow. Now, I've heard you. Many of you said, Clayton, I want to learn how to invest more. I want to hear how I can build some wealth for my family. So today's video is going to be a little bit different than what I normally do here. On this show, I cover the inequities in our economy. That's what my show is all about, right? Covering those progressive news stories and the economy to help you keep more of your own money in your pocket. So I want you to watch the whole video today. And at the end, I'm really going to give you some action steps on some fantastic investing opportunities that I'm taking advantage of right now, and I want you to pay attention to. So again, guys, today's video is going to be completely different than usual. And I'm super excited about today's content because it's something I've put together, I'm especially proud of, and there's been a lot of research that I've done on this and a lot of due diligence and homework put into this. And hopefully you'll derive as much value as you can out of it. So grab your notepads and pens, and I want you to pay attention. So Morning Invest, my channel, has partnered with Phoenix Gold Resources, whose ticker symbol is PGRCF on the OTC markets, because, well, it's one that you need to do your homework on right now. And I hope that you pay attention to it because their management is up on everything that we talk about on this channel. Yes, that's right. The impact of the stimulus, of printing money like it's going out of style, and of this commodities supercycle that began back in April of 2020, which I've told you about repeatedly on this show, and which usually lasts about 6 to 10 years. So if you're not on this bandwagon right now, you're missing out on this commodities bandwagon. So buckle up right now, strap on your helmets, get in your full protective gear, because both Goldman Sachs and JP Morgan's top commodities analysts have confirmed in their reports that a new supercycle has begun. We are in the midst of it right now. Let me just show you this. Here's Goldman proclaiming the dawn of a new commodity supercycle. Here's what JP Morgan strategists believe are the fundamental reasons for this big fireworks show that's about to be unleashed. And for once, we side with the banksters on this one. Let's talk about reopening, number one. Like reopening, just like no one had any idea how business closures would impact the markets. No one truly has a grasp of the power of the masses as the world goes back to living a full life. I mean, just take a look at all the new construction that's happening across the country, and you get to see like new homes going up everywhere, cranes everywhere. I mean, you get global growth right now. Get ready for one heck of a decade of growth in all of these new home construction properties happening. I mean, it's growth everywhere. New homes being built, new construction, new. Heck, at my company, at Morris Invest, my company, we're building over 300 homes this year. 300 homes. And that's barely a blip on what we actually need in this economy. And so when you see all of this growth, and we got to talk about higher inflation. We're talking about higher inflation, weakening of the U.S. dollar, very loose monetary policy right now. And what hasn't been said about this topic? Well, guess what? 2020 has certainly been a terrible year for the dollar, and we believe that there's a clear move away from the dollar right now. Now that it's been exposed as a banana republic fiat currency, I've been warning you, folks. I've been warning you about this, what's happening to the U.S. dollar, and look at Ray Dalio, founder of the world's largest hedge fund, doubling down, saying this cash, U.S. cash, is trash. He's warning of a debt-fueled inflation, calling it the mother bubble. The deflation scare, it says, has put trillions and trillions of dollars in bonds, and we can't wait to see the stampede away from these toxic securities that are super risky and not ultra safe. And folks, this is like game, set, match right now. Think about it. People are diving into these crappy bonds, and the government's buying up as many junk bonds as they can get their hands on. I mean, these bonds that are filled with terrible mortgage-backed securities. I mean, hello, 2008, 2009, all over again. So when you have Ray Dalio saying cash is trash, the US dollar is trash. It is. I've been warning you now for years on this show. And now we're seeing it really start to pop. And JP Morgan tried to suppress gold prices. Yeah, it only backfired on them, since now that gold has become such an important retail story, they attempted to try to bring down the Bitcoin community. And the fact that we now have big companies like Goldman Sachs recommending a part of your portfolio should be away from US dollars into cryptocurrencies and commodities. You don't need more evidence than that, do you? I'll give you some more. So if you're if you think globalist control freaks, if you're any globalist control freak watching right now, know that we, the people, have rejected your twisted need for dominance. We have control, and we, the people, are rising up against it, against this banking hegemony. Pierre Lassonde, you need more evidence, says gold could hit $25,000 in 30 years. He's the co-founder of the first publicly traded gold royalty company. He's a self-made billionaire and was the chairman of the World Gold Council from 2005 to 2009. According to Lassonde, demand for gold grew from $32 billion in 1989 to $177 billion 2 years ago. Furthermore, billionaire Lassonde has also shown that the compound annual growth rate since President Nixon's closure of the convertibility of currency into gold back in 1971, when he took us off the gold standard, he suggests that by the year 2049, its price could be between $12,000 and $25,000 per ounce. And guess what? Changes in Congress are going to clear the runway for this, and a vast array of new programs and departments. The changes will be an attempt to revisit Roosevelt's New Deal. We've been talking about President Biden wanting to roll out green infrastructure. Oh, and we just got clearance today. We actually had some breaking news this morning from Nancy Pelosi. It says the infrastructure bill is the next big agenda item. Massive rebuilding of our society. I mean, just think of the Great Society in the 1960s, but on a massive scale, way bigger than the Great Society or the New Deal. Much more capital intensive scale, because they're going to be financing it by just turning on this unlimited money spigot. And and I want you to stick around to the end of today's episode, because you're going to be blown away with some of these points I'm about to show you here. But you just think about the Federal Reserve Chair, Jerome Powell, and now Treasury Secretary Janet Yellen, combining forces like Wonder Twin powers activate, ready to go ahead and actually push for even more government spending, saying that we could continue this for years to come, and that we shouldn't even be concerned about the amount of money we're spending and borrowing against. Listen to the International Monetary Fund. Listen to the head of the European Central Bank last week. I played you that sound last week here on the show. Now is not a time for austerity. Now is not a time for us to be worried about debt. So, folks, this unlimited money spigot is going to transform our society. And if you think about it, President Biden just the other day talking about how he sees this as the future of America, this new sort of infrastructure to help people. I mean, listen to what he had to say when in the passage of this new COVID relief bill.
And I believe this is, and most people I think do as well, this historic legislation is about rebuilding the backbone of this country and giving people in this nation, working people, middle-class folks, people who built the country, a fighting chance.
Yeah. So if a version of the Green New Deal is passed, it's going to cost anywhere from $10 trillion to $93 trillion. Think about that, $93 trillion. Where the higher end of the range is more the realistic one. We know how the government spends. Do they ever come in under budget? And unlike with previous generations, people have now come to expect government stimulus and direct payments in hard times. We've been conditioned now to assume that this sort of helicopter money is coming. Unlike with previous generations, people have now, though, come to expect the government stimulus and direct payments in hard times. People have been conditioned, and banks have, frankly, too, to assume that sort of helicopter money is coming to bail them out. So they're pricing in the stimulus and spending before they even get the money. I mean, take a look at this. The gold price and the price of top-tier mining stocks tend to follow the money supply in the long run. So look at this chart. It shows exactly where the money supply is headed. It's the classic hockey stick. I mean, the formation with the long horizontal handle and the sharp vertical blade going right up. And then you have along with the rampant currency printing that's coming in 2021. I mean, There's no shortage of catalysts to propel gold prices even higher. The gold supply output has declined, and this decline has only accelerated. At the same time, gold ETF inflows have increased. Did you hear me? I hope I'm making myself clear, is that the gold supply outlet has declined. And that decline is only getting faster. Like they're not able to output as much as they need. At the same time, though, gold ETF inflows have increased. Do you see the teeter-totter here? So according to Nikkei Research, their calculations confirm that the previous gold bull cycle propelled gold price up by roughly 6 times. That was before. So therefore, the current bull cycle should put the gold price above $6,000 per ounce by the year 2025. Citing low interest rates and an excessive money supply, Wells Fargo, their head of their real asset strategy, John LaForge, bluntly said, quote, "We're buyers of gold." Analysts at Bank of America projected that gold will reach an all-time high of $3,000 by the end of 2021 on the back of record central bank balance sheets and fiscal deficits. So now, you know as much as I believe in gold. I've talked about it repeatedly here on the show and how I've continued to buy gold this year. I also am a big believer in 2 other things: diversification and EVs. Yes, that's right. EVs, electric vehicles. I drove a Tesla. I'm in the market for a new electric vehicle right now. Going all in on electric energy. That's why copper and zinc, which are super hot right now, are critical. I mean, I want you to pay attention to this. Copper and zinc, super hot right now. Super hot. And they are critical for any well-diversified gold company. No matter which type of electric vehicle you're looking at, whether it's a Mini Cooper or a Tesla or any of the new line of electric vehicles. Heck, we're building a massive electric infrastructure in the United States. It's going to be a major piece of the coming infrastructure bill under President Biden. It's going to use way more copper, way more than a traditional car with an internal combustion engine. So take a look at your screen. This is the demand for copper, because the math adds up to a potentially significant increase in the price of copper by the year 2027. Look how much we'll need in copper just to keep up with all of these 27 million electric vehicles that'll be on the roads by then. We're already seeing the signs of a long-term breakout because copper has reached its highest price in 8 years in December of 2020, right around Christmas time, with the demand driven by the renaissance in electric vehicles and chargers. And copper's bull cycle might be set to match or exceed those of gold and silver. Can you imagine that? Copper? Higher than gold and silver. Another price driver for copper is going to be China's economic recovery. As that nation is copper's biggest consumer, how do they fare? How will this go? Additionally, not long ago, the International Lead and Zinc Study Group estimated that global mined zinc production would shrink 4.4%. down to 12.33 in 2020. That's a huge deficit, okay? And it's largely a result of supply chain disruptions to copper mining operations around the world. And the world's second largest economy plays a significant role here. Again, refined zinc output in China, the world's top producer, fell significantly. Just take a look at this. This is zinc rallied from 70% from a low that hit in March. Zinc is currently rallying to its highest price since April 2019. Yet that 70% rally from March could really be just the starting pistol in this marathon run for this essential base metal in our estimate. So why am I telling you all of this? You need to do your own research, but I want you to see the fundamentals in all of this, the catalysts and the upside potential of the company that made this video possible. It's on my short watch list of potential inflation plays. I want you to be protected against this crazy inflation. So if you're investing in companies like I am that are set up for success with the U.S. government printing money, I do not want to have my investments in U.S. currency. And this is an under the radar company. It's an extremely small cap company. It's called Phoenix Gold Resources. And personally, I think the story here is in fact that the supply and demand are worlds apart when it comes to copper. But in order to truly grab hold of both the industrial angle and the inflation one, I wanted a company which focuses on both gold, and on copper. And for one thing, between the founder, the CFO of this company, and their associates, over 50% of outstanding shares are owned by strategic investors and insiders. Secondly, the company's gold assets are located in Nevada, the world's premier gold jurisdiction. And in 2018, Nevada's production of gold accounted for 76.8% of the U.S. total. It also helped make the U.S. the fifth largest leading gold producer in the world. And Nevada alone accounted for 5.5% of the world's production of gold, worth in the U.S. $322.6 billion. Now, what's great about this is both of the gold properties in Nevada that Phoenix Gold Resources owns are historic producers. Now, the strategy, though, is to modernize and bring them to current standards along with conducting drilling operations. Third, there's the copper asset, which the company just announced it acquired in Newfoundland, Canada, which is another past producer. These past producer properties are incredibly important. I mean, the demand for copper is through the roof. And as a past producer, Phoenix Gold Resources, their historical copper and zinc project in Newfoundland is the company's path to capitalize on that copper and zinc bull markets right now. I mean, just take a look at your screen and where these industries shake out. I mean, Citibank analyst is bracing for the global copper market to shift into a deficit in the second half of this year. Meanwhile, Goldman Sachs is preparing for the global copper market to face its biggest supply deficit in a decade. Goldman Sachs analysts have raised their 12-month target for price to copper $10,500. $10,500 for copper, which would represent a record high almost in a decade. So Phoenix Gold Resources is developing both a gold project in Nevada and a copper zinc past producing mine in Canada. So do your homework on it. Go out there and research it. Keep in mind that over 50% of the shares are tightly held by the management and the founder and the associates, which means that they have skin in the game and they are aligned with shareholders as we see it. The El Dorado property in Nevada is actually jointly owned with who else? Newmont Mining, which is the world's largest gold producer. The second Nevada property, the Plumas mine, is also jointly owned with Mr. William Matlack, who's a veteran geologist and metal and mining investment banker with Scarsdale Equities, LLC. So take a look at your screen. The Phoenix Gold Project is strategically located next to the Nevada Gold Mine's Fortitude Gold and Copper Mine, and it lies within the company's approved environmental impact statement and their permitted plan of operations. So guys, the bottom line here in this message is that this is a company with a market cap of less than $10 million, with 2 gold projects in Nevada and 1 copper and zinc project in Canada, and the management owns 50% of the shares. That's why I had to show you this one. It's rare to see such a combination of catalysts right now coming so together perfectly, all in one stock. I gave you all of the market conditions and the tremendous upside in their mining operations with these multiple properties. Again, they are part of my very own selective watch list right now, and they're going to be drilling soon, which means news is coming, and it's time to conduct your research on this one. So go out, do your own research. If you're looking for ways to align yourself with one of the biggest institutional investors and the hedge fund titans right now and sophisticated money managers, this is what the sophisticated money is doing right now, which is you better get ready for inflation and this massive commodity supercycle. I mean, look at what Ray Dalio said. Cash is trash, and we are about to see a massive debt-fueled inflation. Be sure to check our full disclaimer in the description area below. But this, folks, is coming soon, so please do your own research on this. So I hope you like this kind of content. I'm going to be doing more on my own investing strategy right now, where I'm positioning my portfolio to watch out for this crashing US dollar and where I see inflation skyrocketing over the next few years. And make sure you're up on everything that we're doing and focusing on around this new infrastructure project that the United States is about to unleash. That is Nancy Pelosi's next agenda item, and President Biden, $4 trillion. That's where we could be spending on this massive infrastructure package. So thanks for watching. Please go ahead and subscribe to the channel. Turn on that little bell notification so you never miss one of our videos. And we'll see you next time, everyone.